U.S. natural gas futures climbed to $3, holding near a three-week high as forecasts signaled stronger demand this week and broader energy markets advanced. Still, gains have been restrained by near-record production, robust storage levels, and outlooks for milder weather that may curb consumption. The rally marked a fifth straight session of increases, the longest winning streak since February. Analysts noted that record output has enabled storage injections to run roughly 5% above the seasonal norm. Even so, production in the lower 48 has eased slightly in early September, while LNG feed gas demand has also softened. Looking ahead, forecasts point to weaker demand next week, a development that could keep futures under pressure despite the recent upswing. Analysts project an early autumn cool spell across the eastern two-thirds of the U.S. through September 8, keeping a lid on cooling demand. Weather forecasters added that a stretch of cooler-than-average conditions spanning from North Carolina to Northern California between September 4 and 8 will further suppress late-season air conditioning needs. U.S. gas production remains near record levels, recently surpassing 107 billion cubic feet per day, despite a modest decline in the rig count, which fell by 3 to 122 last week, according to Baker Hughes. Efficiency gains and stronger well productivity have allowed output to outpace demand growth, even with fewer rigs in operation. This imbalance continues to limit the durability of price rallies, absent a significant shift in weather-driven demand or a notable increase in LNG export flows. Meanwhile, as I anticipated in yesterday's analysis, Russia and China have signed a framework agreement to advance the long-discussed Power of Siberia 2 pipeline, which would deliver up to 50 BCM of gas annually from Russia's Yamal fields to China via Mongolia. Alongside the new pipeline deal, Gazprom and CNPC also agreed to boost flows through existing routes, raising Power of Siberia capacity from 38 to 44 BCM per year. Gazprom's chief executive, Alexei Miller, told reporters, "This will now be the largest, most ambitious, and most capital-intensive project in the global gas industry." With Europe no longer a major buyer of Russian gas, Moscow is increasingly dependent on redirecting supplies eastward, and Beijing has used that leverage to negotiate favorable terms. Analysts suggest Chinese buyers will likely secure Russian pipeline gas at steep discounts compared to European benchmarks, possibly 30% lower. For the United States, the expansion of Russian pipeline supply to China poses a potential challenge to LNG exporters. Cheaper Russian gas delivered by pipeline could reduce China's long-term appetite for spot LNG cargoes, especially during periods of weak demand. If China locks in additional volumes via pipeline, it may rely less on flexible LNG imports, thereby intensifying competition among suppliers targeting Asia. That dynamic could put pressure on U.S. LNG exports, particularly if global supply growth continues and Asian demand softens. From a U.S. natural gas price perspective, this agreement doesn't create an immediate shock but does represent a structural headwind. If Russian pipeline flows displace U.S. cargoes in Asia over time, American exporters may face slimmer margins or be forced to redirect shipments to Europe, where demand is also slowing. That would increase sensitivity of U.S. Henry Hub prices to global competition, storage balances, and shipping costs, making rallies harder to sustain without strong weather-driven demand or supply disruptions. From a technical perspective, the spotlight is on the $2.80 support band. A rebound from this zone could invite renewed buying interest, with traders attempting to establish a secondary bullish bottom. Holding this level would pave the way for a move toward $3.10, followed by resistance at $3.20. Conversely, a breakdown below this range would increase the likelihood of a retreat toward the recent swing low at $2.70. Don't forget to comment, watch the previous video, and show some love for the channel. See you next time.